we're comparing Canadian and US taxes, rich people make capital gains, advantage USA. Let's dig into the numbers. Is the US more advantageous when it comes to capital gains taxation for the rich? Let's look into it. Hi, I'm Sonia. I'm a CPA licensed in both Canada and the US. I'm a cross-border tax consultant and co-author of my new book, Your Move to Canada, all about the tax implications of moving from the US to Canada. I have my cross-border tax assistant here, Lily, who is going to be helping us out with some calculations. So let's start with Canada. How does Canada tax capital gains? So in Canada, capital gains are taxed advantageously. Only 50% of capital gains are taxable. So if we're talking about rich people, let's assume someone's in the top bracket. Their tax on the capital gains is going to be half of this 53.53%. So call it 27%. That is really the maximum amount that someone is going to pay on capital gains in Canada. Although there is something called alternative minimum tax. So if someone has a significant amount of capital gains, they might have to pay a little bit extra, but for the most part, 27% is the highest rate. And this is for someone living in Ontario. Other provinces will have a similar amount. Now, how about the US? So for rich people, again, let's assume that someone is in one of these kind of tax brackets. So for long-term capital gains, again, these are assets held for at least a year. The federal tax rate is going to be either 15 or 20% depending on your filing status and your level of income. So let's go with 15%. That is just the federal tax. Now let's add in the state tax. Again, each state is completely different. Here's California up top, New York, Pennsylvania, Illinois, and then some states don't have state tax. So it's all depending on your filing status and the bracket. So let's use 5% as an example. So let's say 15% plus 5% for state tax. So that's 20%. And this is all from my book, Your Move to Canada. Next, we have to consider net investment income tax. So if you're a high income earner in the US, you may have to pay an additional 3.8% tax on your investment income if your income exceeds certain thresholds. So if that's 3.8% on top of that, if you're, again, rich, high income, then assuming state tax of just 5%, assuming a 15% US federal rate, you're already at 23.8%. And then in Canada, the max is really 27%. But in the US, it could really go as high as around 35%, depending on the state you live in, and if potentially you're subject to the 20% long-term capital gains tax rate. So overall, rich people make capital gains advantage USA. Not always. Canada might be better in some situations, or it may be roughly the same. Capital gains is one where I'd say if you're a high income earner, US isn't necessarily advantageous. If this kind of stuff is interesting to you, check out Your Move to Canada on Amazon, all about navigating the cross-border financial